Okay traders, welcome back to the channel. Here we have the Euro Yen chart in front of us, and I'm going to be going over a quick case study of a buy and sell that you could have potentially taken. So basic price action review or price action analysis. Right, so a quick overview of the higher time frame. So what we have here is Euro Yen, and it's pretty obvious which direction the structure is forming. We see consistent bullish breaks to the upside, we see bullish breaks to the upside over here, and we see another bullish break to the upside over here. So what we've seen is we've seen the last structural high, which is here. So if I label this is the last structural high, and we've seen a clear break of structure, right? BOS, break of structure to the upside. And so from here, what we saw is we saw price give a minor retracement, just like this. So we saw a high get created, we've seen price give a minor retracement before heading higher. So we're looking to catch a buy trade in and around this region over here. So this is roughly where the trade was dissected, so around the 23rd, so the last week of April, week commencing 21st of April 2024. So again, a couple of things to note here with the price action is that we've had a very shallow retracement. Okay, so from here, when we project the Fibonacci tool from the swing low up to the swing high, notice how we had quite a shallow retracement. We didn't even come anywhere near the discount, which is down here. So what does this indicate to us as an analyst? Well, as an analyst, when we see price rejecting at such a shallow, as in we've not even had a discount, right? We haven't even attempted to have a discount. So when we see such a shallow retracement followed by the intention for higher prices, just by looking at the candles, the daily candles, we understand that we should be looking primarily for buys, right? So we're going to be identifying a bullish setup that could have been taken, but also a bearish counter trend setup, right? So another quick thing to note before we go down to the 15-minute time frame is the fact that we had a daily bullish imbalance over here. So we had a massive daily bullish imbalance over here. This imbalance we label in blue. So this is a daily bullish imbalance. Notice how we had this wick over here that simply filled the inefficiency, right? We didn't break the low, we didn't even break the inefficiency. Price came in with a wick, filled this inefficiency before racing higher. So let's see how you could have got involved in a potential buy trade using the concepts of ICT. So what we have here on the Euro Yen is the 15-minute time frame. So if we zoom into the day, so again, this is that daily break of structure. So this arrow you see to the left of your screen represents the daily break of structure. So if we label this daily boss, so let's see how you could have ridden this wave using potential high-low theory, right? So again, what we have over here is the 15-minute time frame. Now, you can use the 5-minute time frame as well. The lower time frames have a little bit more nuances to them, which I normally don't share publicly on the YouTube channel. That's more for our private members. But you need to understand that the markets themselves are fractal. So anything I share on the higher time frames can be applied all the way down to the 1-second time frame if you're crazy enough to trade that. So here we have the 15-minute time frame again, and then we're simply looking at shifts of market structure, fair value gaps, and liquidity sweeps. Okay. So again, what we have over here is we have an Asian range. So this Asian range in orange represents the accumulation phase of the market, right? So this here builds liquidity and it represents the accumulation. Now the accumulation, or the Asian range, is a low volume time of day that produces two main data points that we're interested in, two main liquidity points, right? So we have an Asian high up here, which I'm going to label here ARH, right? Asian range high. And we also have down here the Asian range low. Okay. So what is it about these two liquidity points that's so important to us to understand? So now that we have an Asian range high established, right, we need to understand that we see in the London session, or sorry, even the pre-London session of the Frankfurt session, what we see is we see the price sweeping this Asian high over here. So this Asian high sweep represents what we call a manipulation, or manipulation phase 1. So what we need to understand is when we have an Asian range, just like so, when we see price before the main London session sweeping high before sweeping low again, right? Remember, we want to be looking for buys, right? We're buyers in this market. So when we see price sweeping above the Asian range, giving us this manipulation phase over here, you have to ask yourself, why does price do this? What does price aim to achieve from this? Well, this is a sweep of buy-side liquidity, right? So the main intention for us as a trader is to understand that this here entices early buyers. And what makes this early buyers? It's simply because this has occurred before the official London Open. So remember, this is Euro Yen. So we want to be trading, ideally, we want to be trading the London and New York session, right? New York and Asia crossover, right? So when we see something early in London, especially when we're higher time frame bullish, we only want to be looking for buys. When we see a sweep of buy side liquidity before our session opens, our London and New York session, we understand it's very likely going to be a sweep or an enticement, should I say, of early buyers by sweeping the Asian range high or buy side liquidity. So now as we've gone into the New York session, we've obviously seen price head lower. So we've seen a clear shift down to bearish structure. So we've seen lower lows and higher lows and lower lows and higher lows and lower lows. Now from here, we see a shift of market structure to the upside, okay? So we've seen this shift of market structure. Again, this is what validates our Judas swing, okay? So we've had a manipulation over here. I've referred to this in some videos as the manipulation phase one, right? So this is phase one manipulation. Once we've had a phase one manipulation, the next thing, if you've seen any of my previous videos, which I recommend checking out, is that we have a manipulation phase two in the markets, right? So this here, commonly referred to as the ICT Judas swing or the turtle soup or simply the manipulation, right? This is what the M stands for in AMD, right? This is the manipulation phase over here. So this Judas swing over here, or the low of the day, right? The Judas swing represents that low of the day. LOTD, low of the day. So what we need to understand is that we need to understand what validates a Judas swing, okay? Now, a Judas swing is validated by simply having a shift of market structure. So once we've seen a shift of market structure, we understand that the market is willing to shift higher, especially on the 15-minute time frame. It's a very powerful time frame to utilize. So once we've had an Asian range high sweep, and we've had an Asian range low sweep, we understand that this entire move from London to New York is essentially the manipulation phase. So this price action move over here represents a manipulation all the way down here. This is a London and New York manipulation. Typically when phase one and phase two manipulates, it's a London and New York, right? So from here you want to understand where the trades could have been. Well, first of all, there's a sell trade, right? First of all, there's a sell trade down to the Asian low. So once we've seen a sweep of the Asian high, what we had here is we had a London fair value gap produced itself. So this fair value gap produced at 3:15 a.m. Eastern time, right? 3:15 Eastern time, which falls in that London session, right? So once you've understood what the London session is, you understand that 3:15 a.m. Eastern time is a counter trend trade. That you could have taken. Again, very simple. Waiting for that clear shift of market structure and keying off a fair value gap. This was a counter trend trade. Again, stop loss above the Judas swing, targeting a 1-to-1 or even a 1-to-2. 1-to-2 or 1-to-1 is a safe trade over here. 1 to 1.5 is a safe counter trend trade. If there's something you wanted to stay out of, because again we're only looking for buys here because this market is very much bullish, that's perfectly fine, right? Understanding that the market is bullish overall, this is a low probability trade setup, but it does follow our rules of keying off a fair value gap. So now once we've had a manipulation phase one and we've had a manipulation phase two, we understand both buyers and sellers have been enticed. So sellers get enticed with the overall momentum, right? Sellers get enticed here as price moves down, right? We see sellers getting enticed with this move over here before giving us our structural break to the upside. And so from here, we understand that after price has broken structure, right, what do we need to validate our order block, right? Something I've been through in quite a few videos. What is it we need to validate our order block? So to validate an order block, we need three things. We need price to break structure, right? So we've seen a break of structure. So this is ticked. This is ticked, right? We need price to then give us an inefficiency or a fair value gap, which is what we're going to go through next. And the third thing we need to look for is we need to look for a discount. We want price to come into a discount of some sort of minor structure before heading higher. So let's analyze these three rules in detail. So this is our fair value gap over here, right? This is what makes this a valid order block. It's the fact that we have a fair value gap candle over here. So if I quickly label that for people, this region here is our FVG or our fair value gap here in blue. Okay, so now that we've broken structure to the upside, we have a new structural dealing range to work with, right? This is our dealing range, right? We're now dealing from this swing low up to this swing high over here. Notice how we have a swing low down here corresponding to the Judas swing, and we have a swing high all the way up here. right? We have a swing high all the way up here. So this is now going into the next day. So again, the next day produces an Asian session range. Notice how price in that pre-London session comes down, coming right in our inefficiency, right? So this is where our order block would be. A question I often get is, oh, liquid FX, where is the order block? How do I identify an order block? Well, your order block is quite simply the candle prior to the imbalance, right? So let me just label this a different color for people. This is your order block, right? This is your bullish order block. This is your bullish OB, 15-minute bullish OB. And what makes this an OB or an order block is simply because it breaks structure, leaves a fair value gap, and is priced in the discount, right? So we understand this is our 50% level. It's priced below this 50% level, and price comes in just touching the OB. So look at how accurate price is. Price comes in, wicks, fills the inefficiency over here. So this inefficiency gets filled. And then from here, all our job is to key off the fair value gap, right? So we understand we trade at the fair value gap. We have our stop loss ideally at the Judah swing. I prefer to keep my stop loss near the Judah swing, right? I don't want to be too greedy with the RR because we understand we're trading in line with the higher time frame trend anyway. So now that we've identified our setup using two-phase manipulation, from here the rest of it was simply quite easy. We had a very high RR trade, simply using the concepts of accumulation, manipulation, and distribution, right? A fantastic trade. Again, I didn't take this trade. I don't trade this pair, but I understand people are interested, right? So this is a quick overview as to how you could trade Euro Yen.